Thanks to the miracle of the internet, it's easier than ever to put your money to work by investing it for your future. And there are tons of different methods of investing now, and that can only be a good thing. But with more options comes the potential for inertia. Having so many choices, how do you choose? Well, today I want to help you decide which main investing approach will work best for you. Hi and welcome back to the channel. My name is Pete Matthew. I'm a chartered financial planner based here in the UK, and I've been putting videos on YouTube for more than 10 years, giving you everything you need to know and everything you need to do to secure your financial future. I started this channel to help people to help themselves. And as I said in the intro, it's now easier than ever to do that thanks to the proliferation of really great online tools for investors. But if you're a novice investor, or maybe you've invested before and you want to start taking things a bit more seriously, where do you turn? As we go through this, if it is helpful, please remember to hit the like button down there somewhere and to subscribe to the channel so that we can keep you updated on what we're up to. Also remember that there are chapter markers so that you can skip to whatever part of the video interests you the most. Now, as I see it, you have three main choices for investing your money, and each has advantages and disadvantages. So I want to look at those and then talk about the kind of people who may be best served by each option. That sound okay? By the way, you may be able to hear rain battering against the window here. Hope that's not too distracting for you. Sure is for me. Okay, the three options are, number one, DIY investment platform. Here you add money to the platform, choose your tax wrapper like an ISA or a pension, and then you choose the investments that you're going to buy. Number two are robo-investor, sometimes called robo-advisor platforms, even though they don't give advice at all. Here you will answer some questions about your timescale and risk profile, things like that, and then the platform will suggest an investment approach for you. And then number three, professional advice. And this is the sort of classic way that investing has been done for years, for better or for worse. Investors would employ a financial advisor, stockbroker, discretionary fund manager, and give them a mandate to invest on their behalf. Now, there's still a place for each of these, in my opinion, so let's look at them in a little bit more detail so that you can decide which might serve you best. And towards the end, I'll give you a link to a really great resource to help you with the decision. So let's look at DIY investment platforms first, as most folks watching this video will be most interested in these. And if you think about what investing actually is, it's converting your cash held in the bank into assets which either grow in value or produce an income, or ideally both. So an investment platform needs to offer you access to those different kinds of assets. And for retail investors, these assets largely consist of shares and bonds, or more usually funds, which themselves hold shares and bonds inside. Now, the best platforms offer a really wide choice of investments from lots of different providers. And they become a kind of investment supermarket. And just like you get product promotions in your grocery supermarket, a platform might have suggested funds for you to buy or even ready-made portfolios. And it's this choice of options that is a key advantage of this method of investing. You can build a portfolio which is uniquely yours, chosen from a wide range of component parts, like putting together a great meal from really high quality ingredients. And because the platform is essentially just providing the mechanism for you to buy, sell and hold these investments, as well as making tax reporting easy, the costs are relatively low. Essentially, a platform is just an admin system. It's a technology solution, and like all such things, competition and scale drives down the costs for you, the end user. So you can expect to pay anything really from £10 a month up to maybe 0.5% per year of the value of your investment. So you get wide choice, you get fairly low costs. What's the downside? Well, everything is on you. If you choose your investments poorly, it's your fault. The platform just made it possible for you. You're the one that has to press the button to invest. Nobody's got to do it for you, and you obviously have to live with the consequences. And there's no one at the platform to bounce ideas off. If you ask the customer service department, the first thing they'll tell you is that they can't give advice. So it stands to reason then that DIY investment platforms are best suited for investors who are interested in taking control of their own finances at this level. Investors who are interested in learning about how investing works and then putting that knowledge into practice. Folks who have the time to devote to researching their options and monitoring progress as time goes on. Some great examples of these type of platform are Hargreaves Lansdown, that's the biggest of its type in the UK. Interactive Investor, AJ Bellevue Invest, and Vanguard Investor, though that one only offers Vanguard's own funds, so your options are a bit more limited there. Could be worse though. Limiting yourself to Vanguard funds is a little bit like being told you can only drive a Bentley for the rest of your life. Not a recommendation though. Do your own research. So let's look now at robo-investment platforms. I mentioned earlier that these are often called robo-advisors, which annoys me no end because, again, these platforms don't really offer specific advice to your situation. Instead, when you open an account, you'll go through a kind of questionnaire, which will ask about your investment knowledge and experience. It'll ask about timescales for your investing and how you feel about risk. And you might also be asked about any ethical or socially responsible factors you want to apply to your investments. And your answers to all these questions will be parsed by an algorithm, and then a result will be spat out by the system. Mr. or Mrs. Investor, you could consider our balanced ethical investment portfolio. This is what it looks like, this is what it costs, yes or no. So it's a kind of guided approach, but ultimately you will have little or no control over how your money will be invested. The platform will have a limited number of pre-built portfolios, and you'll just be guided into one of those. You can choose a different portfolio to the suggested answer that the platform makes for you, but you won't be able to change any of the component parts. And because these platforms are building and maintaining a portfolio of investments, they're going to charge you more for doing so, and that's fair enough. So you can expect to pay anywhere from 0.75% to 1% a year of your investment value to a robo-investor. Usually the more you hold, the lower the cost because the charges are tiered. But ultimately this is a if this then that kind of a deal. You answer the questions like this, so you get that portfolio. You are telling the platform enough about your goals to enable them to invest for you, but you're delegating the methodology and day-to-day management to the platform. But there's zero ongoing work needed on your part. The platform will rebalance your investments, it'll swap components in and out for you, it'll provide the tax documentation that you need to report to HMRC. So if you know you need to invest, but you can't or don't want to spend the time choosing your own investments, these are ideal, as long as you're happy to pay a little bit more for it, for that done-for-you approach. You'll also need to accept that the investments are built without full knowledge of your wider situation. It's a kind of limited relationship that you have with the platform. Nutmeg is probably the most well-known of these kinds of platforms, but others include Wealthify, Moneybox, and Money Farm. Again, none of those are recommendations. You need to do your own research. And so we come to the third option of professional advice. And it's worth mentioning here that while I am a chartered financial planner and I'm advising clients every single day, I spent the last decade or more affirming the fact that anybody can do this stuff themselves without the help of a financial advisor. The key difference, I think, of having your investments advised upon and managed by a professional is that they are on the hook for the suitability of that advice for your unique and changing circumstances. And for many people, that's reason enough to dismiss any other option. Having somebody to delegate this vital part of our finances to is golden for some people. They might just be busy, they might be terrified of the stock markets, while at the same time acknowledge that they do need to invest in order to beat inflation. Maybe they have absolutely no interest in learning about asset allocation, rebalancing, or active versus passive investing. They just want somebody to do it all for them. And for these folks, taking professional advice is worth every penny. But it will cost you. Advisor charges will vary immensely, and they can be fixed fee, hourly rate, or based on a percentage of the money being managed. An advisor might charge an initial fee to set up your investments at the first place and to onboard you as a client, and they'll certainly charge you on an ongoing basis. That ongoing charge will likely be between 0.5% and 1% of the value of your investments each year. And that's on top of the cost of the underlying investment. I've seen total cost of ownership charges way north of 2% per year, and that is a big drain on your growth into the future. No advisor can guarantee that by applying their expertise, they will get a higher investment return for you, and in so doing justify their fee. But a good advisor will be doing much more than investing your money anyway. They should be optimizing for tax and costs, using tax allowances, harvesting gains and losses, being able to respond to your changing circumstances. They should be proactive in their responsibility toward you. In 20 odd years, I've never had a client complain about overcharging, so our clients clearly feel that they're getting value. And really that's what it comes down to. Where do you see value in the investment process? What are you prepared to pay for, and what are you prepared to do yourself? So your choice of investment approach comes down to you. The factors that will determine whether you DIY, opt for a robo-investor, or seek professional advice are: Whether or not you have the time to devote to your investments, whether you have the inclination to learn about investing and enjoy getting involved, and whether you are prepared to accept responsibility for your investing decisions, or whether you want to delegate that to someone else. And as with everything in finance and in life, you have to know yourself first before you can choose the optimal option for you. And once you've figured out which main option you're going to choose, you'll still need to decide on the specific platform or advisor. Now, the best place for info when it comes to platforms is the Boring Money website. I'll put a link to that in the description. My friend Holly Mackay has money on all the platforms on her site. So she has, real practical information and opinion on what makes those platforms great or not. When it comes to choosing an advisor, you can do a search using Unbiased or Vouched For. I'll link to those in the description too, but there is a lot to be said for getting a referral from a friend or family member, somebody who has used an advisor themselves and had a good experience. Last thought, but it's an important one. Remember that the decision you make need not be final. Moving money around is easier than it's ever been. So you might start out with a robo-investor and shift your money in a couple of years to a DIY platform. I've even had clients try to go it alone and then realize that actually they do want somebody to do it for them. So we've taken over their investments. So don't feel like you're making a decision for life. Absolutely nothing is irreversible. Okay, hope it was helpful, folks. If it was, again, don't forget to hit that like button. Many don't, but it really does help. So thank you in advance. Subscribe to the channel if you haven't already so that you can see the next video that we put up. Thank you so much for watching, and I'll see you in the next video.